Okay, well, good morning, active traders, and welcome to our Trading Week Ahead live broadcast. I've been doing these over 15 years now. I'm Ken Calhoun, your host from TradeMastery.com, coming at you live here on Saturday, November 26th. Looks like 26, 28, something like that. We're 26, 2022. Anyway, great to see everybody here. Markets have been in an uptrend, but we're likely to pull back a bit. My forecast for the month ahead, I usually don't do forecasts. I like to react instead of predict, but I think we're going to get a choppy market next week, maybe slightly down even. I forecast selling the second and third week of December, and then a Santa Claus rally bounce the last week of the year. So that's my official call, is chop, maybe slightly up or down next week, nothing significant next week, maybe a little bit of selling. I think slight selling is going to be next week. The second and third week in December are going to be sharp, relatively strong sell-offs, catching people by surprise, and then we'll get a bounce the last week of the month. That's my prediction. And also, too, if you've not yet registered for the Success Summit with Tom Sosnoff, Steve Nissen, many other people, the whole list it's at worldstoptraders.com, and it's coming December 17th. So we got Sosnoff, Larry McMillan, Steve Nissen, myself, Bennett McDowell, Marina, the trader chick, myself, and others coming up December 17th. So go to www.worldstoptraders.com and you can register for that absolutely free. And we just do half an hour. So it's December 17th. Trying to remember current events here. Anyway, let's go ahead and get a look at the markets. That's my forecast. Choppy next week, slightly down most likely. Some accelerating sell pressure second and third week in December, and then a lift in the Santa Claus rally the last week of the year. That's my official prediction for what's going on. Hey, as we get into the market, we're going to take a look at the VIX next. And the VIX seldom goes down this far without a bounce, right? Volatility index is at support, and it's gone down as far as it goes down before it cycles back up. The volatility index is an up and down instrument. It always, 100% of the time, after a drop, will go back up again. The question is always timing and where, right? That's the trick, but the volatility index always goes up and down. So it's in a down mode now, right between 20 and 21. You can see we're right here at a key support level, which is just under the 19. So 1920-ish on the VIX is support. I'll call 19 as technical support. 19.4 or something. Anyway, 19 is support and 22 is resistance. Remember I said that. Look how valuable this will be for you next week. I could come back and say I told you so, but if the VIX gets over 22, I'm going to aggressively get into my inverse instruments like SQQQ, UVXY, and SOXS. If the VIX gets under 19, then I will start swing trading into strong equity charts that are currently trending up, the 2-day gap continuation plays. So whatever those may be on that particular week. So maybe back into some of the crypto-related stocks like Marathon, Coinbase, and blockchain, the Riot chart. So anyway, key point, this is very, very critically important. The VIX is an extremely good kind of navigational tool for, is the market going to go up or down? And it's inverse, right? So the VIX has been going down as market's been going up, but it's at a key support level. And although I don't see a hammer bullish engulfing down here, and it actually looks like some pretty strong selling pressure lately, we're coming in on a support level. That probably escaped all of your notice, right? I mean, unless you're a fellow professional trader, you probably aren't as in tune with the VIX as you might want to be. It's really important. So the VIX is at support, meaning the market is at resistance. That's an internal signal that most traders don't know to look for, right? For example, SOXS, I think, is a freaking bargain down here. This is a really good place to get in SOXS, or semiconductor inverse, on a pivot. It's at support. It has not lost support. 30 uses support, and 40 major support and resistance on SOXS. We go long if it bounces. I'm long a little bit here, but I'll start putting on some serious size if and only if the SOXS regains 40. The reason I love it is because it's got a double trade potential, right? It had come off of 80 just a few short weeks ago. Middle of October, this thing was 80. Now came all the way back down to 30 to 40. It may well bounce to a mean reversion pivot up to the 55.60, right? That's my exit target on this, by the way. It would be to aggressively go long right over 40 with an exit target right around 58.60. So maybe 18 points and with no more than a 2 or 3 point risk. So that's a good chart. Now let's take a look at some of the charts that we looked at for swing trades, just straight long breakout swing trades. EXTR had been a crowd favorite. We'd covered for you guys last week and the week before, and it's done really well. If anyone took EXTR, I don't know how many of you may be in EXTR, but nice 45-degree angle run, and it looks good up here with a 20. Now these kind of charts and others are ones that we cover in my live room, and one thing I wanted to mention is I do have a Black Friday special going on this weekend where you can join the live room for just the 97 money back guarantee and no subscription, non-recurring. So mainly for those of you who are new to working with me and don't know if my style is a good fit for you, a good match. It has been for thousands of other traders because we take a more careful approach. We don't do hit and run thousands of shares of cheap under $5 stocks. That's gambling. I prefer charts that have reasonably strong upside runs, and we'll look at some examples in a minute. But anyway, Black Friday special, you can join my live room for just $97 for the entire rest of the year from now through the end of December, and non-recurring and money back guarantee if you don't like it. And you can look at all the details and no questions asked. So so far I've had less than 1%, far less than 1% people ask for a refund. A vast majority of people enjoy the training. So that's why I'm pleased to present it, and you can see testimonials. So that's our, and it's at trademastery.com/holiday97. Just wanted to mention the URL. I think I sent out an email, or I will later, trademastery.com/holiday97. All right, let's get back to it. Enough sales pitch. Let's get on with the chart. So the XTR looks good. That'll play. By the way, for intraday charts, let's take a quick peek before we get back to the swing charts. We did cover this one. Manu was pretty good too. EUDA, MANU. Those are good intraday charts because, you know, they've got multiple points of range. I like charts that are like this, like $20 stocks that have $2 or $3, $4 worth of range. That way you get more, how to say, more leverage or more bang for your buck, right? It's really wild charts too, like COUP, right? Going from 59 to 64. Anyway, lots of good volatility to work with. Now let's take a look at some swing charts coming up. Pull up the daily chart here for you. I have no idea what that strange noise is outside. Bit disconcerting. Anyway, GPS looks really good. Gap Stores has been, you know, a specialty retailer that ran up nicely. Oh, thanks for all the tickers. Hey, Mira. I will pull those up, folks. Thanks, Mira, Polly, Iman, Shalish. Will do. Anyway, GPS continues to look really nice. It's got some bearish upper shadows here, but if it gets over the 15.5 or so, maybe good for a continued run to the upside. So Gap Stores coming from a 910 base up to 15, you know, 50% run up in the stock price lately. So that has really good relative strength. DHT, another good steady runner, pulled back last week, the middle of last week. So again, we don't want to touch it unless it gets above the previous high there over the 1070, 1080. But it's been a really good trend, right? This one may be good for a pivot because it came off the 35 down to 17, 18, and it's nibbling at the 20 in the multiple of 10. So take a look at that. Another good up chart is FLEX. All right, let's look at some others here. You guys had asked about these. So those are my picks. Let's see what you guys had asked about. Costco risk reward is not good here. It's likely to chop around or pull back. It isn't an uptrend. It may be along over 540, but I think there's better charts, better trades out there to be had. Hey, Alex, instead of raising your hand, if you have any questions, just type them in the chat box. I'll be happy to answer. That one looks brilliant. DE, really good chart. That one I love. That's a great chart over 450, right? Wonderful chart. It's got lots of range. It's been an uptrend for month after month after month with a minor late summer pullback, but I think that's Deere, right? Really good chart, DE. So Costco, nope. Deere, yes. ARRY. I like the uptick. Yeah, the range is good enough. So that one, I'll give it a pass, but a B- if I had to grade it. It's an okay. The saving grace is that it has lots of range. The thing that's not good is the inconsistency. And even though the gaps have been up, that's good. It had a 2-month pullback from August to October. So While it's okay, I think there's better fish to fry out there, so I'll take a pass. NOTV, yeah, that would be a good pivot candidate because of the volume and the bounce and the range, right? It came from a trading range of around 20-ish all the way down to 6. So, and it's starting to show some bounce. It's got a bullish hammer there, and the red candle. So that one's a pass. Yeah, NOTV, again, not trade recommendations, but long over 8 with an exit target near 11, or so makes sense on that one. That one's good. DGII, that'll play. You can see it's up near 43, and the range. The main thing I look at is consistency of the trend and the point range. So, for example, if the range in this had only been like, I don't know, 38 to 42 or 40 to 42, it wouldn't be worth trading. But since the range is 21 to 42, it's a doubler. It doubled in value over the last 6 months. So it's a good chart. I like that one. So yeah, DGI, that one will pass. Things I'd make a portfolio out of for 100, Alex. ADM, Arthur Daniels, range is just okay. Maybe if it gets over 100 later, it's got a good uptrend. Yeah, actually that one will pass reluctantly because it's really expensive for the range you get. But if it breaks the 100, say 101, 102, I may take a shot. But it's just okay. Let's see, ExxonMobil. Same thing, it's got a good uptrend, but the problem is the range is not sufficient to justify a $100 price tag. It's only got $20 of range. So for $100, I'd want like a $40 range. For a $20 stock, I'd like a $8 to $10 range. You want big ranges. It's really critically important to make the numbers work out, to make the money work out. Tesla looks like a good short under the 160. I'd short Tesla. I wouldn't buy Tesla with the 10-foot pole. But a short on a drop continuation, yeah. Now Meta, on the other hand, a big dropper that's starting to bounce. I like Meta. Remember, I called it for you guys 2 weeks ago over 100, right? I told you it'd be good over 101, 102. Okay, good point, probably on DGII. Low volume. Okay, we'll fire it then. Meta has plenty of volume. Now again, it's at, how to say, the resistance on this chart is right at the previous low, right? This is a really good example of what my colleague Steve Nissen calls a change in polarity, where previous support became new resistance, right? And for more on candles, be sure to learn from Steve Nissen at candlecharts.com. No one else. Steve Nissen, he's your go-to guy for candlestick training. He developed all the things that other people copied. So he knows that better. Other people copy it badly. So learn from Steve. Anyway, this is a good example. I learned so much from Steve Nissen the last 20 years. He's brilliant. You have my word. Nissen's worth learning from. Anyway, this thing is support. Previous support is new resistance. So let's call it what Steve calls a change in polarity. And it's good to identify this kind of pattern. So for my way of thinking, it'd be worth trading if it gets back over the 120, say 121. So Facebook long, if it breaks the 121. And see, this is a good example of range meets criteria. Look at the range on the chart. The most important part of the chart is not the chart, it's the right side, the calibration of the range. Ask any professional trader, ask any Wall Street trader, ask any floor trader or former floor trader. Range is more important than anything. Anyway, so this one had 90 to 200, so over a 2-to-1 range. So that's good. And Alex, I see Alex raising his hand. If you have questions, type them in the chat box and I will be happy to answer. Anyway, 200 down to 90, so it's a 2-to-1 ratio on the range. That's tradable on a pivot, so over 122 on this thing. And not a trade recommendation, but what I'm looking for. Disney's been interesting, up and down near 100. Kind of choppy lately. No, we'll take a pass on that though, too choppy. Someone asking about TWNK. Yeah, that's a good chart. That's a nice trending chart. Actually, this one I would go in long above the bearish engulfment over the 2770. So I'd get in right over 28 and then again over 30. We have a major bearish engulfing, 2 bearish engulfings, right? Bearish engulfment right there, told you to sell, loss of that. The second bearish engulfment on the bounce says sell, loss of this. So you really don't want to touch this unless the minimum it gets back over 28 and preferably up there. Yeah, it's tradable. And again, the range is 19 to 29, so that's plenty of range. CGL, no, that does not have enough range. It's too choppy. I'd get stopped out trading that. Amazon, no, that's a terrible chart. Okay, so of all those charts you guys came up with, I only like 4. And test out what I say, right? Test out the ones that I pick versus everything else, and you'll see the difference. All right, let's see what else we have here. Colgate. I'm going to suspect the range isn't very good, but we'll take a look. CL. I like a 2-to-1 range on the right side. So the low is 10, the high should be 20. Let's see, SMCI. The low is 20, the high should be 40, not 22. SMCI. Well, thanks, Novell. Appreciate it, man. Let's see, SMCI. That's a great chart. Yeah, that one's good. See, that has range. Everybody see that as a 2-to-1 range and a great trend. I like that. I'm surprised I didn't see it myself, but thanks. I'd hit that. No, it's expensive, way up at 95 a share. And again, for swing trades, I don't like to buy anything with a 9 in it. So I'd wait till it breaks the 100, say 101, 102 in a future week or something, but it's headed up, so it's nice. If it clears the 100, that looks good. Good range, good strength. Now see all that. Now see, that's a terrible chart, right? There's no defined trend. It's been bouncing, but it's still in the middle of a chart, which is the worst. This is the worst place. The worst place to trade a chart is in the middle of the chart. So this one's no. So some really good charts. EXTR. That's the best chart so far. It's got an over 2-to-1 ratio, and it's been a nice strong uptrend for quite some time. So anyway, we're going to wrap up here soon. I wanted to thank all you. I'll pull up a couple other tickers in just a minute. Just a last reminder here. I do have a Black Friday special. You can join my live room. We cover both day and swing trades, Monday through Friday. We meet 8:30 till 11 and 3:30 to 4, plus any FOMC or other major news type of time frame. So really popular with traders since the year 2001 or 2000, something like that. 20 years I've been running my live room. Thousands of people around the world have enjoyed it. And Black Friday special, satisfaction guarantee. It's only $97 from now. You can join and get access till the end of December. It doesn't renew. There's no subscription. It's a one-time $97 is all for a whole month of training with me. And I even have a money-back guarantee if you don't find it suits your personal style. So that's my Black Friday special. Your ticker or the URL is www.trademastery.com/holiday97. All right. So that's it for that. Close that off. All right. What else? Someone had asked about the VIX. Join late. Remember, the volatility index is at a key support level. I bought 1,000 shares of UVXY yesterday because I know how to trade. It's at support way down here. Anyway, volatility ETFs and ETNs, you always buy low and sell high. And I always buy near the 52-week low because it always, 100% of the time, has pivoted up within several days after reaching a new 52-week low. So that's why I bet a bit there. Not a lot. I didn't do that. I was tempted to do maybe 2,500, 3,000, but I just did 1,000 for a starter baby trade in UVXY because I know the volatility index the VIX goes up and down. Anyway, volatility index, our support is, I'm going to use 19. That's right below the previous low. So the trade strategy, again, follow the VIX carefully next week. I'm not going to go long on swing trades unless the VIX gets under 19. That will be a strong bullish signal for the stock market if and only if it gets under 19. I suspect it's going to whiffle waffle around here and chop between 19 and 22 all of next week, start to climb up towards the 22 by Friday. And I think the market's going to sell off second and third weeks in December, and we'll validate that with a spike in the VIX over 22. Remember I said that, write that down. If my life depended on my making the correct call, that's the call I'd make. Short this market if the VIX gets back over 22, which I'm certain it will, at least second week, if not end of next week as well. So anyway, and if 19 support, again, this is opposite the stock market. So when this goes down, market goes up. And when the market goes down, it goes up like it did a few weeks ago. Another quick point, this is very valid and a good, valuable strategy is when you look at price elasticity or timing elasticity. As a professional pattern swing and day trader, I'm always looking for repetitive patterns. What happened the last time the VIX went down this far for this long? What happened? Well, it reversed all of a sudden back up. Now I caught it for everybody, right? I told my live room members as long as we're 22 and a half, I think it was 22.50, 23. That was my long call for the VIX, and it ran all the way up to 34. So anyway, volatility index, it's price elasticity. It's gone down about yay far. Back in July, August, it went down the same exact length. And last time it went down, what happened? Spiked back up. As Alan would say, the hard right edge over here, the right side of the chart looks more like this than it does a continuation down. We're in a cycle up and down market, right? You know that. It's been an up and down, buy support, sell resistance, buy support, sell resistance. So intelligently, you need to think about that and fill in the blank on the right side of the chart. What's most likely to occur would be a pivot back up. Now we may do a false breakdown here. There's a bear trap. And then the mother of all runs up. That's actually slightly more likely to occur. So that's why I say next week may be choppy. The market may go up a bit or down a bit, but ultimately I think the VIX will recover no later than the second week in December. And you want to be looking for inverses and or shorting the market or buying index puts once the VIX gets over 22. And that's a very valuable call. And you're welcome. You'll see. Keep note of this, and keep me honest, and you'll see over the next 2 weeks. And when the VIX is back up at 29, you'll say, "How did you know it was going to be?" Well, patterns repeat. And yeah, John, I do think we'll get an end of year rally. We will almost always do a Christmas rally. So again, next week choppy, slightly down. Middle 2 weeks in December will likely be pullback weeks or down weeks, and we'll get a Santa Claus pop the last week of the year. That's my forecast. Choppy next week, down the next two, and then up the fourth week. Nobody goes out on the limb like that to make calls like that, but I know how to trade. I know price elasticity, and I know usually, I'm usually pretty right about these things. So keep track, and I hope that gives you guidance or some ideas to at least test out and see, does this guy Kowloon know what he's talking about? And I think you'll be impressed. So anyway, the main thing is I hope I help you be profitable, right? So that's what I do this stuff for. So. Good trading is so much more than what's the day's $3 hot stock that's going up. That's for morons. Professional traders, you want to scale and position size so you're swinging some large size during these runs. And equally, or more important, know when to get out or tighten up trailing stops. Well, thanks, Neville. Appreciate it. Let's see what else. I think that's about it. See, Heidi's asking about cold. I think I bought some cold myself. I'm pretty sure I'm in cold. Yeah, I bought like 300 shares of cold, so a little itty bitty dinky trade. But yeah, I'm long cold here. Again, when markets are often driven by crowd psychology. And so when everybody sees a support level being held and it bounces, they pile in, right? Just like they did last time this was down at 10. So KOLD, our inverse natural gas, is down here, and you can see the large green 40 million plus volume. Somebody bought a lot of it on Wednesday, and then we got a little pop here yesterday as well. So it went up. So anyway, good charts, everybody. I wanted to thank you all for being here. I think we've got lots to keep in mind in the upcoming weeks ahead. So just remember, do keep an eye on your VIX. The 19 by 22 is the key support resistance range in that. Yeah, John, yeah, I like that. All right. Hey, Will, why is VIX 22, not 25 or 26? Well, that's a congestion area up here at 25, 26. That's consolidation. So that's kind of an uncertainty zone. Certainty zone, though, is down at support here. So I would buy the bounce over the 22 by going long in our VIX products like UVXY or VIXY, whatever you're trading, and go long in the directional longs for stocks and ETFs to go up, if and only if the VIX gets under 19. Final look at this chart. This is the 1 year volatility index. What does it tell you? Does it tell you that this is likely to, again, look at it like you're a bookmaker in Vegas. And of course, we're the house, right? We're not the players. We like to give the players some fun entertainment for their money, but ultimately take all their chips, right? So we set the odds in our favor. If you're a bookmaker setting odds for how you play the over-under on this, or how you'd set up your odds, what do you think is the most likely play in this? Or let's say I watch a lot of football. I like those. Anyone else watch those 15-minute YouTube? They're great. The highlights reels of the football games the NFL puts out, they're wonderful. They're great. It's highlights. That's what I like. I don't have patience to watch 2-hour game, but 15 minutes, it's great to watch. So anyway, if you're a football player, or you're a Vegas odds maker, what's the most likely play in the playbook here? Hey. What's most likely to occur here? Down or up? I would give you like 30% odds down, 70% up. No later than the 16, 17, but more likely here in that 18 to 20 level. So again, connect the dots. We're at support. And any professional trader, any quant, Wall Street quantitative analyst, any CMT, anybody who knows how to trade, sees that we're at support. Now, we also know that things often break down under support, false breakdown, and then rally back up as well. So be ready for that. But I would expect the VIX to not go down any further than 18, 19. That would be a kind of core support level. And if it does get back over the 22, or as soon as it does get back over 22, which it certainly will, the neat thing about trading based off the VIX is 100% of the time it goes up after it goes down. Never in the history of the VIX does it keep going down and down and down and down, like a stock like Bed Bath & Beyond or something, right? Instead, it always, 100% of life will go back up. The question is when. It looks like it's right for a bounce. The length of the runs, the timing, the height, it all says VIX is going to bounce. That's what it says. Remember that I'm making this call even as the VIX is all red, okay? It doesn't take too much intelligence to forecast a bounce after it's been bouncing for a bit. This still looks all, bad and red. I'm forecasting a pivot as early as Monday or Tuesday, very soon now in the VIX, simply because of the price action pivot likelihood based on the up and down cycle of this chart. So, all right, thanks everybody. Yeah, and you guys are saying the next move is up in the VIX. Yeah. Suggestion of ETF. My favorite right now would be SOXS, SOXS. Again, I don't make recommendations, but I like SOXS because it's way down as support. I called it for my traders long at 1305 yesterday. Look at the 6-month here. Trying to show you the 6-month. And we're at a congestion zone. Yeah, maybe it would be a short under 30, a long over the 40. SQQQ would be a short under the 42, a long over the 50 would be the, again, we don't want to buy right. Again, we can start hammering away at it right over 46, but I'm not going to put on size and SQs till it breaks the 50, okay? But yeah, we've got good volatility in these things as well. All right, well, you folks have been great. I wanted to thank all of you for your time and your energy to be here, and do try my live room at trademastery.com/holiday97. And I guarantee your satisfaction or money back. So risk is all on me. I stand behind what I offer, and I hope that it helps you make better winning trades more often, a way of life. So happy Thanksgiving weekend and Black Friday and all that kind of stuff. Happy holidays. Take care. Be safe out there, and I'll see you guys next time. Bye for now. I'm going to wrap up now. So best wishes for success in your trades.